Welcome to MarketStream.live. This is where we take a look at all of the market action here on the closing bell. My name is Joseph Cusick from the Cusick Group Securities offered by MoneyBlock. Folks, this is the end of the trading month in April. I cannot believe it. It has come and it is gone. And it is April 28th. On Monday, it will be May 1st. And you know the adage, sell in May and go away. We're going to see, but I got to tell you, the price action today, well, this picture just speaks volumes. Look at this area right here. This is the Dow Jones Industrial. After the pop on Monday, nothing. As a matter of fact, it has just been grinding. Up 1.5%, 2%, down 0.2%. As a matter of fact, today we finished down 40 points at 20,940, under that psychological 21,000 level. But in all seriousness, we have a grindy market, a market that has not been able to move with conviction based on economic data, based on earnings, or the hope and promise of some sort of policy from the Trump administration. Nothing is moving the markets right now. Of course, this week, the initial move was based on the fact that the French elections, the first vote, the centrist Macron won and is running off against Le Pen. But now it looks like Le Pen is starting to catch up some ground in the polls. That'll be discussed all weekend. But the one thing that I have to note is this: implied volatility. I'll go through the rest of the indices, but implied volatility is down in the 10 level again. It's telling us that the market is just completely complacent with whatever's going on. We're seeing some decent earnings. We are seeing some mixed economic data. The latest first quarter GDP, it came in, I know everyone's like, yeah, it's first quarter, first 100 days of Trump. It's not going to really impact it. These are just the legacy policies and so forth from the Obama administration. But coming in at 0.7%, personal consumption was actually lower than expected. You're seeing in Japan that GDP came in as well as CPI came in a little bit lower than expected. You are seeing, though, in Europe that inflation is a little bit higher than expected. But you also saw that the money supply increased, which basically means either they're having growth or they're going to have to stop this quantitative easing policy. So you have all of these different moving parts. But one thing that I have to tell you is there is no volatility. There is no sense of fear. There is nothing. That's not necessarily a bad thing. It just makes it very hard at all-time highs to make a decision on how you want to position this market. So that's why I guess it's best said, keep an eye on critical levels and keep your powder dry. Use very wise position and size management. Now, taking a look at the S&Ps, again, consolidating up here at these levels, bouncing its head off of that 2,400 mark on the S&Ps. It was down 460 today at 2380, 420. The levels that you're going to want to watch are going to be 2363. Actually, if you want to take a look at Tech Talk that I did this afternoon, I give you all the levels for all the major indice ETFs. The diamonds, which are the Dow Jones, the spiders, which are the S&P 500, the Qs, which are the NASDAQ, and the IWM, which is the Russell 2000. The NASDAQ was the best performing index all day, and rightfully so. When you have Google, Amazon, and Microsoft trading up and very strongly after earnings, but still it's somewhat of a muted stance. You have the NASDAQ 100 only up 12 after some of the largest cap tech stocks basically moving to the upside. Now, we did have Apple. It was a little bit challenged on the downside, and they're going to be reporting next week. We talked about that in Tech Talk as well. So go back April 28th. That is today, Tech Talk. You can either go to @MarketStream.live on Facebook or go to MarketStream.live. Go to our website. It will be posted there. The Russell 2000, though, it did pull back hard today, down 1670. This is a bit of a red flag. Now, of course, the bulls are still clearly in control. How do I say it? Why do I say that? Well, the market in the Russell is still trading above its 20 and 50-day moving average. That means that the short-term and intermediate-term bulls are still complacent or happy with the current environment. But we saw some profit taking going into the close of business today on this domestically centric and sensitive index, meaning these are small caps, domestically held stocks. Things like the policies of tax reform, healthcare, trade policies are going to impact this ETF pretty dramatically. Unlike some of the larger cap multinational stocks that do have a reprieve with having a lot more exposure into the international markets, both from a growth and sales perspective as well as from a currency perspective. We already talked about volatility, non-existent. As a matter of fact, what's interesting is it looked like they took out volatility. We're already trading on Monday's numbers, and that was going into the afternoon. What does that mean? That means that basically traders just called it a day. Taking a look at the dollar index, did finish off of its best levels and below its 20-day moving or 200-day moving average, that 99.14 level, but still at 99 bucks. Again, a dip below 99. Any dollar bulls are going to struggle. That did help crude. Crude did have a bullish inventory number. There was a draw of over 3 million barrels. We're going to keep an eye on that. We saw a little bit pullback in the Brent contract at 51. You're also seeing that bonds, they upticked a little bit today, both on the 2-year, the 10-year, and the 30-year. And what's notable is again, keep an eye on that 10-year yield. This is going to be a little bit of a barometer. It finished the day at 220. Let's see. Today it finished at 228.20. 2.28%. Boy, it's Friday. Thank goodness. With that being said, the level that you don't want to see challenged right now is 220 on the yield. If you see 220 on the 10-year being challenged, that means that there is a huge influx or a larger influx of bond buying. And at this juncture, with the numbers we're seeing, markets hitting all-time highs, that would be a bit perplexing. And then finally, like I said, taking a look at Apple. Apple, large cap tech, trading right off of its 20-day moving average. We talked about it in Tech Talk, but Apple is pricing in a potential of a 3% range next week. That means it basically has a range in the $143 or $144 underlying. It's trading at $144.03 in the after hours. It basically has about a $4.41 range, either up or down, going into their earnings next week. That's on Tuesday. Now that can change dramatically over the weekend. We're a headline away from these markets moving in one direction or another. Also, let's see what the action is on the spending bill. We could have a government shutdown, which obviously the market doesn't really care about. But there are so many different components that are going on right here that the market just seems to be pretty complacent on, that we really want to be very prudent about deploying capital. All right, folks, that is it for the closing bell. I appreciate everyone watching this week. I look forward to jumping in Sunday night. We will be doing Sunday night setup. So join me Sunday evening. That's going to be at 6 o'clock Eastern time, 5 o'clock Central. We're going to be doing some setups. We'll take a look at some ideas and some ranges after the futures are open on Sunday night. It'll give us a little bit of a better taste of what we could expect going into next week's trading week, the first trading week of May. So we'll see you then, folks, and have a wonderful weekend. Take care.